Hi everyone. In this lecture video, we will be going to talk about the degree of operating leverage. To give you an overview of degree of operating leverage, profit is controlled by managing the contribution margin and the margin of safety. The operating leverage of a profit is equal to the contribution margin. Therefore, when we are talking about the degree of operating leverage, we are looking at the relationship between the contribution margin and the profit. So this is how you will going to compute for your degree of operating leverage. Hence, profit as used in this topic means that we are only using the EBIT or the earnings before interest and taxes. If the problem will going to give us an after-tax profit, then we should be able to convert it to before-tax profit. Then aside from having an idea that DOL is equal to the contribution margin divided by the profit, we have to remember this alternative formula that the degree of operating leverage is equal to the percentage change in EBIT divided by the percentage change in sales. Or we can have another formula for the degree of operating leverage using the margin of safety. And that is the degree of operating leverage is equal to 1 divided by margin of safety rate. Remember that the margin of safety is the difference between the budgeted sales and the break-even point in terms of amount. These are the three formulas that we have to remember if we are working out with degree of operating leverage. Now let's try to answer our illustrative problem. We have to compute for the earnings before interest and taxes if sales increase by 40%. So if the sale will increase by 40%, then let's take a look at what will be its effect in the earnings before income and tax or in our EBIT. So first, let us determine the degree of operating leverage ratio. The contribution margin and the profit are to be determined using this given. The contribution margin here, since we have the number of quantities sold, which is 10,000, then we will going to get the contribution margin. If sales is 200 pesos per unit, then our variable cost is 60%. Sales is 100%. Therefore, our contribution margin ratio is 40%. Then let's get the 40% of 200. Our contribution margin is 80 pesos. So our total contribution margin here should be 10,000 units multiplied by 80 pesos. We will going to get 800,000 less our fixed cost. Our fixed cost here is amounting to rent, which is fixed, 250. Our depreciation, which is fixed cost, 200. So that will be total 450 plus our other fixed miscellaneous expense of 100,000 for a total of 550,000 pesos. Therefore, our earnings before interest and tax will now be 250,000 pesos. Then we can now be able to compute for our degree of operating leverage. Since our contribution margin is 800,000, so let's write first the formula. Contribution margin divided by the EBIT. Remember, once again, if you're wondering why did you use the EBIT instead of the profit, because under the topic for the degree of operating leverage, profit is always equal to EBIT. So let's go back to our illustrative example. 800,000 divided by 250,000. Our answer for this is that we have 3.2. So meaning to say that the degree of operating leverage will have a multiplier for the percentage change in sales amounting to 3.2. So let's try to compute for the percentage change in EBIT. So now that we have computed the degree of operating leverage, we have here 3.2. Then we have here the percentage change in sales, we have 40%. Now, we will going to look for the percentage change in EBIT. And how should we compute for the percentage change in debit? So we have to rearrange the formula. Percentage change in EBIT is equal to percentage change in sales multiplied by degree of operating leverage. 40% multiplied by 3.2, then our percentage of change in EBIT will now be 128%. So meaning to say, if there will be a movement in the percentage of sale, there will be a multiplier of 3.2 to the percentage of the EBIT. So let's try to prove our answer. So we have here the before, after, the change in amount, and the percentage change. So the sales here will still be constant. Sales 200 pesos per unit multiplied by 10,000 units, we will going to have 2 million. But since there will be a 40% change for the sales, so 2 million multiplied by 140%, we will going to have 2,800,000. Meaning to say there will be an increase by 800,000 pesos, 40% change. Next, for the variable cost, it will not going to be affected. Our variable cost here is 200 less 80, we're going to get 120. So 10,000 units multiplied by 120, we will going to have 1,200,000. Since the sales will going to increase by 40%, then our total variable cost will going to increase by 40% as well. So you will going to multiply 1.2 million pesos multiplied by 140%, you're going to get 1,680,000. Then the difference for this one is that there will be an increase by 480,000 for the 40% change. So our new contribution margin is 1,120,000. Our contribution margin before the 40% change is 800,000. Now, the total change in the contribution margin is 320, which is also the 40% change. We should be able to plot the fixed cost, 550,000. Fixed cost will not going to be affected by the change in profit. So our total EBIT is 250,000 and our EBIT after the 40% change is now 570,000. And this 570,000 attributable to the 40% change, which is equal to 320,000. Now, if you're going to compute for the percentage change, so that will be the change, the total change, divided by the unadjusted amount. So our unadjusted amount is 250. So 320,000 divided by 250,000, you will going to get the same answer, 128%. So it's up to you, whatever is more convenient to you. If you're going to plot your answer this way, or you will going to use this formula. So let's summarize what happened in our illustrative problem. When sales are going to increase, then our degree of operating leverage should be higher as well. That is for you to be able to maximize the percentage change in EBIT. But if the sales is decreasing, then our degree of operating leverage will also decrease. That is to minimize, and let's put it here, maximize. Minimize or maximize what? The percentage change in EBIT. Okay? So meaning to say that the degree of operating leverage will have a direct relationship on the movement of the sales. That's it for our lecture video today. Thank you all for watching.